Hello to everyone, welcome to the second episode of the weekly review. So today I'll walk you through a comprehensive overview of last week's key economic events, financial market performance, and what we should focus on in this week ahead. So starting from the last week's overview ending December 6, the non-farm payrolls report for November showed an addition of 227,000 jobs, with an employment rate edging up slightly to 4.2%. This growth surpassed expectations, underscoring the resilience of the labor market amidst broader economic uncertainties. Next, on manufacturing, both the ISM manufacturing PMI and the S&P Global Manufacturing PMI pointed to a contraction in the sector, with readings of 48.4 and 49.7 respectively. While these figures indicate challenges, the ISM index shows signs of stabilization compared to previous months. Turning to energy markets, crude oil inventories fell by 5.1 million barrels, a larger than expected decline. This tightening supply could drive energy prices higher during the winter season. On consumer sentiment, the University of Michigan Consumer Sentiment Index reached 74.0, the highest level since April 2024. This reflects improving consumer confidence, though concerns about future inflation linger. And finally, the U.S. trade deficit widened to $73.8 billion in October. This increase highlights in rising imports, which may weigh on overall GDP growth rate. Recent developments in Middle East puts the world on watch for more chaos. The shakeup leads to immense challenges with a devastated economy, ongoing humanitarian crisis, and uncertainty over its future leadership. Further elevated regional instability may drive the oil price upward, as markets may anticipate potential energy supply disruptions. Although the country itself is not a major oil producer, its strategic location and the ripple effects on neighboring oil exporting countries add a geopolitical risk premium to global energy markets. In December 2024, South Korean president briefly declared martial law, citing threats from opposition forces, which led to mass protests and a swift nullification by lawmakers. The president now faces criminal investigation and calls for resignation, while his actions have raised concerns about South Korea's democratic stability and drawn criticism from North Korea. The incident has sparked debates on the limits of executive power and the resilience of democratic institutions in the country. Now, let's take a brief look at last week's market performance. The S&P 500 gained 1.2%, closing at just under 6,100 points, driven by strong performances in consumer discretionary and technology sectors. The Nasdaq Composite rose by 1.3%, closing at 19,859.77, supported by advancements in semiconductor and AI-related stocks. And lastly, the Dow Jones Industrial Average saw a 0.7% increase, closing at 45,014.04 points, bolstered by gains in healthcare and industrial blue-chip stocks. Looking ahead, key U.S. economic indicators and events to watch include Consumer Price Index for November, releasing on December 12th, which will offer critical insights into inflation trends. The second is the Producer Price Index for November, scheduled for December 13th. This provides a measure of upstream pricing pressures. Initial jobless claims for the week ending December 7th, set to release on December 14th, offering a pulse check on the labor market. Additionally, we have significant bond auctions for 3-year and 10-year Treasury notes on December 12th and 13th, respectively, which will gauge investor sentiment and interest rate expectations. On the global front, energy markets remain a focal point, with ongoing analysis of OPEC Plus production cut decisions made on December 4th, which could influence crude oil prices amid peak winter demand. In China, industrial production and retail sales data for November will be released on December 13th, shedding light on country's economic recovery. Geopolitical risks continue to cast a shadow, particularly the Israel-Hamas conflict, the Ukraine war, and rising China-Taiwan tensions, all of which have significant implications for energy markets and regional stability. In summary, last week presented a mix of resilience and challenges in the US economy and global markets, and this week offers a critical data point that will shape economic and financial narratives. Let's stay vigilant and informed as we navigate these developments. See you next time.